As we continue doing Chapter 14 problems, we'll look at number 50 in the text, which is also a connect assign problem. And this is found on page 1439. Here's a case where we, like earlier problems, have partners who are contributing assets, and we're given the basis and the fair market value, and we only contribute assets generally at basis. So we'll bring those in for the contributing partners. But in this case, we have Catherine, who's a third partner, and she's not contributing assets, she's contributing her services. So in this case, I've changed or reallocated the percentages, altered them slightly from what's given in the problem. But the method, of course, is the same as we said earlier. And so, in this case, we have to determine what the value, the fair market value of Catherine's services are, because services are brought in at fair market value. So in this case, I took the fair market value of the assets, $100,000 of the equipment, $100,000 of the building, and then I multiplied it by 12%. And that gave me $24,000. So $24,000 is a guaranteed payment to Catherine. She'll have to report that as income on her Form 1040, but then she does get credit for the basis of her contribution. In other words, her basis, as we look down to Part B, goes to $24,000. So she paid tax on that because it was a guaranteed payment, earnings, but because she contributed no other capital, she does get credit for this at $24,000 in her capital account. And then the other assets that were contributed by the other partners are brought in at basis, as we've done in the past. And those are the values then for each of the partners, the basis for each partner coming into the partnership. So that's nothing really new. That was the only thing new on this problem, really, is that we had to consider that Catherine is a partner by virtue of services contributed, not by because she contributed property. The one thing a comment I would make about number 54 in the text, which is also a connect assignment, is that we need to consider, when we're looking at, in this case, Wade, he had a basis in the partnership of $23,000. So I just brought that in, changed it to 25 using my numbers, and then I just listed all the other information given in the problem. They want to know what Wade's self-employment income is. Well, Wade's self-employment income will consist of the ordinary income, any guaranteed payment, and then we'll deduct the Section 179 expense that I mentioned in the PowerPoint video. All right, so once we take the ordinary income of $43,000, and then to that we're going to add the guaranteed payment of $12,000, and then we'll deduct that Section 179 expense. Using my numbers, we have a total then of self-employment income of $36,000. She'll have to report on Schedule E. And then they ask, well, what is Wade's basis at the end of the year? And the basis will consist then of the beginning partnership balance of $25,000, and then we'll add the ordinary income of $43,000. We'll also add in the long-term capital gain, the Section 1231 of $4,300, and then of course we'll have to deduct the $2,000 for the charitable contribution. And then we'll further deduct the Section 179 expense. And then we'll also have to deduct the cash distribution, because that was money that was taken out of the partnership. All right, so we'll add these additions to the basis, deduct the subtractions from the basis that I mentioned, and using my numbers, Wade's adjusted basis at year end is $60,800. So feel free to play back the video as often as you need to kind of get a sense of how to both determine the self-employment income as well as to take a look at the total adjustment of basis and then the final balance of basis. Moving down to number 6, another Connect assignment problem that ties to number 58 at the end of the chapter on the bottom of page 1441. Here's a case where Roberto has a basis of $6,000 in the partnership at the beginning of the year, received $7 in cash distributions, distributed share of $3,500, received the land distribution with a basis of $6,000, fair market value of $12. So I've adjusted some of the numbers there. And I just, of course, in the first cells, just listed what was given. Now, the first thing I did is I had to calculate the adjusted basis in the partnership before the distribution. I also kept some T accounts. Now, you could have listed these as investment accounts for a limited partnership. It doesn't really matter. In this case, we're just trying to deduct and add to these balances, these basis balances. So I just kept T accounts going so that I could just update any changes to the basis for both Roberto and Rebecca. And that's just a nice way because, first of all, when you use these T accounts, we know that we cannot ever distribute past the basis balance. So in other words, we cannot drop basis below 0 in any event. And so how do we handle excess distributions? Well, let's talk about that in this case. Given the values, A, is Roberto required to recognize any gain? All right, so if we look at A, we have no gain recognized. The distribution is only, it would only be from cash-like, such as money in marketable securities or release of liabilities, where a gain would be recognized. So in this case, the distributions then would not trigger recognition of gain. So the answer, of course, to A then is there is none. B says, what is Roberto's basis in the land? Well, the basis in the land, which I just brought out from the T account, is I took the maximum value of the fair market value of the land, and then to that I added the adjusted basis amount in the partnership of $9,300, and then I subtracted the $2,300. And I wound up then with the $2,300. I didn't subtract, pardon me, the $2,300 was the other alternative value. So we wound up then with $2,300 as the minimum balance. So the last problem we'll look at then is number 6, which ties to number 58 on the bottom of page 1441. And as we're going along for Roberto, I did keep a T account to just kind of track the balance in his basis, because I know that the basis cannot drop below 0. Okay, well, I just gave the information that was given to us in the problem, except for I altered one value. And I just listed them in the preliminary cells. Then in the gray cells are intermediary calculations. So after listing the distributions for the year, Roberto's distributive share of income, basis of land distribution during the year, fair market value of the land distributed during the year, got all that data down. My first calculation then in this case is I needed to understand what the adjusted basis in the partnership before the distribution was given. So where did we start then before any distributions were made? Well, we're going to first start with the beginning basis of 5,800 using my numbers, and then we'll add to that Roberto's distributive share of income, which is 3,500. So that's how I got the adjusted basis before we made any distributions. Then I needed the adjusted basis in the partnership after the distributions. So in this case, I took my adjusted basis before the distribution of $9,300, and from that I deducted the cash distributions during the year of $7,000. So $9,300 minus the $7,000 gives us $2,300. So those are my preliminary calculations, and I just kept updating in my T accounts. I've got the beginning balance. I've got Roberto's distributive share of income. That's his portion of the income the partnership made. And then a reduction to the capital account in this case is cash distributions received during the year of $7,000. That'll reduce the basis. And then the basis of the land distribution, which was $2,300, which I calculated up here. And now we can just answer the questions directly. The amount of gain recognized by Roberto, well, given the nature of the assets received, there's no gain here. Yes, there was cash distributed, but there was also property. And when cash and property are distributed, we don't recognize gain. Now down to the basis in the land for Roberto, that is $2,300, that's calculated up here. And that's puts in the $2,300. And then, of course, Roberto's ending basis in the partnership. If you look over to my little T account here, you'll see that we can't drop below zero, so his basis is down to zero at the end of the year. If you have any questions on these or any of the problems in the chapter, please let me know.